Rajesh, I find those statistics a little curious because Kenya has the longest history of capitalism in the East African region, and yet it has the highest cost of doing business.
I think we need to look at this in context. What we are looking at as part of the study, first of all, let me give you a bit of background. This is the fourth study which was done by PricewaterhouseCoopers in the World Bank, and what it looks at is a case study across over 180 economies. And what we're looking at is for a medium-sized company across those over 180 economies, we're actually looking at what is the tax burden on that. And when we're actually looking about tax, we are not only looking at just tax on profit, we're actually looking at anything which is mandatory, which is compulsory, and the payer doesn't have a discretion on it. So it's actually looking at total tax burden on businesses. So we have picked up a case study and examined the impact of that in those 180 economies. So when you actually look at that for Kenya, yes, you're looking at as a percentage of profit, the total tax which such a company pays in Kenya is 50%. But having said that, I think we need to have that in context, because that's not very much different from what we come out on the global average for those 180 economies which I was talking about earlier. In fact, Kenya, in terms of its total tax rate, is actually near the global average itself. In fact, it's better than the Africa Union average, which is nearer 70%.
But I'm surprised. I'm surprised by the fact that Tanzania is ahead of it, because we do know, of course, about Tanzania's history with dabbling with a little bit of socialism, and of course Uganda's adventures under Idi Amin.
Yes, that's fine, but like I said earlier on, what we are doing is we are actually comparing not just the profit or tax, we're actually looking at tax in its totality. And when you look at it in terms of the East African community, yes, Kenya is around 50%, but if you look at Rwanda, Uganda, etc., you're actually having them at a similar number, which is not only the corporate income tax we're talking about, it's also including labor taxes. We're also looking at other taxes, other levies, which could be charged on such a company. So if you look at Tanzania, Tanzania's rate is around 48%. Which is nearly similar to the one for Kenya. Uganda is about 35%. Yeah, and what we are looking at is just not the profit, the tax on profit.
Sure.
We're also looking at labor taxes. We're looking at other taxes which are levied on businesses.
Yeah.
So it's an all continuum of taxes.
But in spite of this,
Kenya
of course,
compares.
Yeah, I was going to say, in spite of this, we do know that Kenyan companies dominate the region, and the economy is the biggest in the region, suggesting perhaps that without the benefit of the burden of these taxes, the Kenyan economy could actually have been bigger and the company stronger.
I think as you would appreciate, doing business, tax is just one of them. There are obviously other factors which come in. Infrastructure comes to my mind. The sort of type of quality of human capital needs to be considered.
Sure.
So when people look at doing business, I don't think they just look at tax. Obviously, if all things being equal, they would look at tax, and if they have to pay less tax somewhere else, they will go there. But they would actually also look at other factors and consider them when they're setting up business or doing business.
Do you think we could perhaps then see next year some kind of movement, Kenyan firms perhaps moving into Tanzania and setting up base there, trying to take advantage of the lesser tax burden, or perhaps into regional hubs like Mauritius?
I think just on because of tax, I can't see people just making a move, because the differences are not that significant. Because they will consider other things like access to market.
Sure.
They will look at also the infrastructure, the type of skills they need, where are they available. And I don't think when businesses are thinking of doing new business or continuing business, they just look at tax cost. They consider other factors also. How easy is it to do business?
What about the cost of compliance? How big a burden has that been, and how much more does it cost a company to comply tax-wise in Kenya than, say, compared with Tanzania?
I think that, in fact, one of the key findings which is coming out when we look at the comparatives, in fact, it takes a lot longer for companies in Kenya. The case study which we were examining in Kenya, it takes a lot longer to comply compared to the other countries. In fact, the interesting is Kenya's total sort of hours they take is 417 hours. Where the other countries are nearer 200 hours. We've done a bit of analysis of this and tried to determine what is causing so much more hours in Kenya compared to Tanzania, Uganda. And it's around the preparation businesses are required to do to file their returns for consumption tax, which in Kenya is VAT. That seems to take a significant portion. I mean, out of the 417 hours which were computed for time taken to comply for this case study in Kenya, 234 hours were going into preparation for VAT. In fact, it's a subject we have already discussed with both government and the Kenya Revenue Authority, and they are actually looking at and determining is there any way we can lessen this burden on the taxpayer, because the objective is to make it easy for taxpayers to pay tax, both in terms of the time to comply and also the number of payments they need to make for paying those taxes.
Rajesh, from our Nairobi studios, thanks very much indeed for joining us this afternoon.